Okay, let's pull back the curtain on a market framework that's hiding in plain sight. Seriously, once you see this cycle, you're never going to look at a price chart the same way again. Let's dive right in.
So to really get a handle on this, let's start with a scenario that, well, if you've ever placed a trade, this is probably going to feel frustratingly familiar. We're talking about the classic retail trader's trap.
I mean, have you ever been in this exact spot? You're watching the price, you see the move you've been waiting for, you finally jump in, and then bam, everything just reverses on you. It almost feels personal, right? Yeah, this whole sequence is practically a rite of passage for traders. You see a breakout, you chase it, the market immediately turns around, hits your stop loss, and then, only after you're out, the real trend you wanted to catch takes off without you. So frustrating. But what if I told you that sequence wasn't random at all? See, these moves aren't just market noise. A lot of the time, they're actually part of a very deliberate, very repeatable playbook that's used by large institutions, what a lot of traders call smart money. And this is that playbook. It's called the AMD framework. That stands for accumulation, manipulation, and distribution. You can think of it as the hitting engine of the market, a three-act story where smart money quietly builds up a position, creates a fake move to trap everyone else, and then cashes in on the real trend. All right, so let's break down each phase of this cycle. Because once you can spot these three stages, the story the market is telling you becomes a whole lot clearer. The entire thing unfolds in these three steps. It really has a rhythm to it. A quiet buildup, a sudden shakeout, and then a powerful follow-through. Let's start with phase one. The whole cycle kicks off with accumulation. This is the phase where the big institutions are quietly building up massive positions, but they do it in a way that doesn't cause a huge price spike. The analogy of a spring being compressed is perfect. All that potential energy is getting stored up, just waiting to be released. So how do you actually spot this happening? Well, you'll see the price just kind of moving sideways, usually in a really tight, kind of boring range. The volume is typically low, and often the general market sentiment is neutral or even bearish. Nobody's really paying attention. And that's the perfect cover for smart money to load up their positions. Okay, next up is the manipulation phase. And this is probably the most important part of the whole cycle. This is the trap. It's that sharp, sudden move designed to grab liquidity, which is just a fancy way of saying it's designed to trigger all the stop-loss orders from the first group of traders and to trick breakout traders into jumping in on the completely wrong side of the market. And this slide just illustrates the psychology perfectly. The retail mindset is screaming, "It's breaking out, I have to get in now, don't want to miss it, FOMO!" Meanwhile, the institutional mindset is completely calm. They see that exact same price spike and think, "Excellent, liquidity grab complete. Now it's time to position for the real move." They weren't chasing it, they created it. So after that trap is sprung, the final phase begins, distribution. This is the powerful, sustained trend that everyone was hoping for, but most people just got shaken out of moments before. This is when smart money starts to unload or distribute their huge positions into the market for a tidy profit. And you'll know this phase when you see it. It's a really decisive move with high, increasing volume that confirms the trend. The price action is usually very clean, making clear higher lows in an uptrend or lower highs in a downtrend. And ironically, the traders who missed the start often pile in late here, which provides the final push that lets the big institutions get out of their trades profitably. Okay, so that's the theory. But how can you actually learn to see this cycle for yourself on a live chart in real time? Well, there are a few very specific clues you can look for. Think of this table as your cheat sheet. For accumulation, you're looking for that sideways price action and pretty flat volume. For manipulation, you're looking for that false breakout, often with a long wick, and here's the key, a sudden, sharp spike in volume. And finally, for distribution, you're looking for that sustained trend with high and rising volume. It's a clear 1, 2, 3 sequence. And what's really fascinating is that in some markets, like Forex, this cycle often lines up with the daily trading sessions. The Asian session is usually low volume, right? Perfect for accumulation. Then the London Open brings this huge surge of liquidity, perfect for a manipulation move. And then the New York session is often when you see that real directional trend, the distribution play out. It's like a time-based map of the cycle. So you see, understanding this cycle is way more than just a neat little trick. It fundamentally shifts your entire perspective on trading. You go from just reacting to every price tick to becoming an observer who knows when to act. This quote really just says it all. The AMD framework isn't about having a crystal ball to predict the future. Not at all. It's about learning to read the story the chart is telling you right now. Is the market building energy? Is it trying to shake people out? Or has the real move finally started?
So the big takeaway here is really to change your whole approach. Instead of chasing that first breakout, you learn to wait. Wait for the manipulation. Let the trap show itself. Then you can time your entry to ride along with the real trend, the distribution phase. The whole idea is to trade with the smart money, not become the fuel for their trades. And that's really the choice this whole framework gives you. This cycle of accumulation, manipulation, and distribution. It's going to repeat day in and day out across every single market. So the only question left is, which side of that trade are you going to be on? Are you going to be the liquidity that gets swept up? Or are you going to be the one who learns to read the narrative and trade with it?